Hey, what's up, everyone? Welcome back to the channel. I'm Danish. Today, I have a special guest with me, Mark Connors from 3IQ. He is the head of research at 3IQ. If you don't know 3IQ, they're one of the largest digital asset managers in Canada. And Mark, I'll pass it on to you for a quick background into yourself and 3IQ.
Great. Thanks, Danish. So I joined 3IQ about 9 months ago. Came from Credit Suisse, where I was head of portfolio and market strategy. And my background was to look at all assets and help hedge funds and other allocators decide what was the best place to be, what were the emerging risks. And the reason I came to 3IQ was because in that role, I saw that even the best managers were having trouble making money. There were these waves of volatility coming from, interest rates and from currencies, and it was really overwhelming their ability to isolate idiosyncratic risk, basically picking stocks. You guys, we all saw it in was it January of 2021 with the meme stock, uprising. So there's all these new technologies happening, wreaking havoc. So stepping back, my background after almost 30 years in the traditional space, just like we see every couple decades, there was a new emergent technology that I thought could really help bridge the gap between what is failing in the fiat world. I mean, look at anyone now trying to buy a house with their current wages. It's very difficult. So I know I packed a lot in there, but just from my spot, I saw a problem. I saw digital assets as being the remedy. And the reason, I joined as soon as I saw the opportunity was because there's an urgency to this.
No, I appreciate that. And you mentioned digital assets. How would you define digital assets for those who may not be aware of this specific terminology? Like, is it crypto? Is it like Bitcoin? How would you define digital assets?
A digital asset is a ownership in a protocol that provides a value or service that is ensconced in a blockchain. So I think that ownership, which again is different than if you were to say use Facebook. So the idea in the digital asset realm is that it's a technology-driven approach to an economic exchange where the ownership and the incentive structure can be mutualized, meaning instead of having certain companies, we can't really mention names, have certain companies give you free service, but they may use your data and get benefit that way, and you don't know what the blowback is from that access to your data, how it's impacting you. Digital assets is more transparent in how it works, and we think in that way gives value to people.
No, it's really interesting you mentioned that. So when you say digital assets, especially in recent years, we've seen an explosion of coins. Traditionally, maybe a couple of years ago, people focused on Bitcoin and Ethereum. Then we saw a whole bunch of, like I mentioned, you've talked about meme stocks. Now I feel like there's also meme cryptos, and there's Solana and the ETH merger. There's so much happening in the space. Plain investor every day who wants to save for retirement wants to make sure that they can fund their retirement, they can fund their savings goal towards a house. How can they weed out the noise from what they should be focusing on?
Good point. So I'll get more simple. We talk broad terms. Within digital assets, let's look at things top down. Today, the whole space is about $1 trillion. And that pales in comparison to like the equity market globally is 60 trillion cash. So it's, and GDP is 100 trillion. So 1 trillion, that's how big it is. It's small. Bitcoin is about 40% of that, a little less, maybe, 390 billion. Ethereum is about 23% of that. So, something like 230 billion. And then you have stable coins. So you're really talking about when you talk about digital assets, three things: Bitcoin, Ethereum, and stable coins are over 75% of digital assets. The things you hear about metaverse or those other 19,895 coins, they are incubators, they're smaller. So just that scope, I'm not saying they're worse and they're not going to be great, but just sizing the opportunity, that's the landscape.
So is it based on, for example, let's say my dad called me up and saying, hey, I've heard so much about crypto, I know nothing about, how can I get started? Where should what is my launching point into the space?
So this is not going to be the answer that probably most people want to hear, but if you don't do 10 hours of your own work as an investor, I believe that you're not positioning yourself to be successful because it's a complex area. There's going to be a lot of information where people will be like, oh, you're stupid. Don't you know a lot of criminals use it? Don't you know this? And there's what we call FUD. So that's our first term we're going to define here. Fear, uncertainty, and doubt. It just hits your dopamine structure to try to scare you. If you want to get involved, there are podcasts that you can go to, or you can go to our research. We would love for you to follow up on our 3iq.ca website. We have research there. We explain things as far as what the opportunity is in digital assets, what the problem is, as we talked about, in the real economy, about why it's hard to have a wage, buy a house these days. And then there's another book I would recommend called Digital Gold by Nathaniel Popper. It's excellent.
What I'll do, I'm going to take that research that you mentioned. I'm going to leave a link for all of you guys watching in the description below. And also leave a link to Mark's book here. So when you're interested, you can check that out.
So just going into it, today is the anniversary of the white paper by Satoshi Nakamoto. So very timely discussion we're having. So everything starts with Satoshi. There's no blockchain until he put his paper out suggesting that he solved the double spend. How can you have a banking system if someone isn't the judge and deciding when a payment happens, who holds my stuff? So the whole idea about a digital asset environment is that it's supposed to be able to be decentralized, lower cost, secure, and scalable. And all three of those things give rise to the lower cost and secure, done well. Again, complex topic, but when you look at opportunities in finance over time, there's that famous 1995 interview, I think, with Bill Gates and one of the late night talk hosts, where David Letterman, where he's making fun of Bill Gates. Who's going to use the internet? Is it for... So I'm not saying that this will have the internet. We're not supposed to sell ideas, but I think if you do the work, I have not met anyone, Dinesh, who has done 10 hours, who has not been involved in the space. There are very few people who have done the work who have not realized the potential and the mispricing.
I think you're absolutely right. I think it's that fear of the unknown, right? But once you start digging into something, start off for 10 hours, you realize, what? This all of a sudden starts to make sense. And the more you learn, the more you educate yourself, and it can be through podcasts, with our book you mentioned, it's all about education. And I think that's why I preach on this channel, like financial literacy is something that, unfortunately schools don't teach, but it is so important to learn what is a stock, what is bond, what is crypto, and how does it all sort of fit into personal finance.
And just, I don't know how much time we have, but there's one thing I want to leave you with, is that money and technology is not new. I mean, after World War II, or during World War II, when the world was on fire and there was uncertainty about Allied versus Axis forces, 44 leaders met in a hotel in New Hampshire in 1944 while the war was raging. It was all the Allied forces, and they met and they agreed that all the gold that they had, France, Belgium, all the Allied forces, Britain, they were all going to put their gold in the basement of the Federal Reserve in the US. And then, hopefully, fingers crossed, when they won the war, they would then issue notes, US dollars, against that gold to help accelerate the recovery. So they had a plan, and that was new, and that was a technology, because the money went faster than the gold. So what we think crypto is, and I believe that Bitcoin is just an advancement on that idea, that the ownership remains in the blockchain. It is advancing quickly through a decentralized network, as opposed through a centralized currency protocol, dollar, euro, yen, etc. So it's not that odd an idea. It's just an advancement of our ability to make money work faster, better.
So where is the regulation today, and where does it need to get to for that mass adoption, where people are like, hey, crypto is just everywhere, and it's whether it's transactional, whether it's savings, like how do we get from where we are today to where we need to get to?
Well, Canada advanced quicker than the US, or let me say it's a game of leapfrog. The US came out pretty early, and I'm based in the US, even though I work for a Canadian company. And the US passed tax law in 2013, and then I think crystallized in 2014, which allowed people to understand it's an asset. So again, it's the 14th anniversary of the white paper. Bitcoin was minted in the Genesis block, which we wrote about last week, on January 3rd of 2009. So it's been around for a while, but it's matured. I still think one of the biggest points of regulation, which allowed people to own it, was the IRS saying it's a property and we'll tax it as such. But to go to your point about what's really happening now, The arc of regulatory advancement has never been steeper or faster. President Biden came out with an executive order on March 9th of this year, and all of the agencies have followed through with the same language that they want to have responsible innovation. And so it is happening at a pace we've never seen before, so that when the CFTC and the SEC, that's the US, make the determination about who gets what coins and how it's done, institutional adoption, it is believed, will just be off to the races. Now, Canada, again, was earlier. Our firm launched its first ETF 2 years ago, the first in North America, and then others followed. We don't have a spot ETF for Bitcoin or Ethereum in the US. We don't have the ability to do that. Canada does. And that's why people like it. It's got low tracking errors because of, just not getting technicals, but it's a pretty efficient animal. So that's what really helped adoption with retail, is to have that easy, familiar, it's on an exchange, it's got a regulatory wrapper, I know the person's regulated, I trust it, etc. So that's helped. When that happens in the US, 10 times bigger than Canada, boom, we think that, that'll be another leg off with adoption. So,
And how far do you think we are from reaching that stage with the US? Because I think you're right, it's absolutely, for mass adoption, the US is critical.
I think that it is going to happen with stable coins. And if I had to be pressed, because why not play a game here, 3 to 6 months. I think there'll be stable coin regulation in 3 to 6 months in the US, and other countries will close. It's coordinated. The Bank of International Settlements, the EU, they're all talking to each other.
And for retail investors, so you can either hold coins, whether it's through a platform B or platform C, but there's also, now you mentioned ETFs. So what is the consideration? Like, am I better off holding coins or ETFs? Like, what guidelines or principles should I look at as a retail investor on which avenue I should pursue?
You asked a point of question. If you are an OG, like an original crypto native, they have a term that says, not your keys, not your coins. They have a sovereign orientation. I need to own and be the only holder of the access to the coins through the blockchain. So there's nothing between me and the coins. That has a responsibility, though, because if you forget your seed phrase or something, then you do not have any support. So there are other layers, such as the ETF that our firm has and others have, where you have ownership through a regulated entity, and probably the easiest gateway to owning. And you can also own it in a retirement account, which, given the volatility and the improved, and the expected return profile, if passes prologue, that may be something that people would look at.
Yeah,
we can't recommend anything, but that's what we see as the arc of interest.
I absolutely agree, because I think one of the other, when it comes to like tax, for example, like when you hold coins, whether you sell or buy, right? Because there'll be capital gains and then you'll have to pay tax on it. I think what's really cool is with the introduction of ETFs, all of a sudden, I can hold an ETF that tracks Bitcoin, Ethereum, whatever it may be, and put it in a TFSA, put it in an RSP, right? And all of a sudden, you either have tax deferral, whether it's an RSP, or no tax at all from a tax-free savings account. So I think that is really cool. And I think there's a lot of these ETFs are now merging that retail investors can look at.
Again, we can't give investment advice, but just sharing observations. There's a study done, more than, I won't say it, with some empirical support, that people who trade crypto on an exchange have a pretty poor return profile. And so the reason that happens is, without a business plan on the investment side, people tend to buy on the upside when things are going higher, and then when things are going lower, or we don't feel as good about it, especially if we haven't done the work. I mean, we all have friends who have done well or picked something early. They didn't do it whimsically. They understood it. They did the work. I have friends who understood Amazon much earlier than I did. They did the work. I didn't. So they made money in Amazon. So I believe we're doing the work now, and we'll see how it turns out. But, I invite others to dive in.
And I'm great you said that, because, like, for example, BMO and Vanguard, they came out with these asset allocation ETFs, whether it could be 100% equity or 80-20 was a traditional equity bonds, or 60-40. Where do you see crypto as part of that overall investment strategy? If I'm saving for a house, if I want to save for a down payment, maybe buy a car, long-term, short-term goals, where should crypto be part of your overall portfolio strategy?
We can't give specific advice. I can direct you to a piece we did in September called the Bitcoin 60-40 Enhanced Portfolio. So to your point, a traditional portfolio like an endowment is 60 equities, 40 bonds. And that has been a disaster this year. In fact, it's had its worst return ever. I mean, the US has only had a 10-year bond since 1962. And it's had, I think it's down 20% this year so far. We put in 3% of Bitcoin in a traditional portfolio, and it outperformed the traditional portfolio over definitely a 10-year period, obviously, but 5 years, 3 year, and even 18 months. So I would direct people to that piece, because what it shows is when people look at portfolios and they want to allocate, they say, well, how much opportunity does each asset have? Think of like, a race car versus a minivan. They have different purposes, right? When we look at bonds, they're more stable with income. Equities have more volatility and historically more upside over the long run and more downside over the short run. So they balance each other. Bitcoin's return profile is so unique, where equities have a normal distribution, like say they average 2.9% every quarter over the past 5 years. You're as much easily to be on the downside of that as you are on the upside. There's a normal distribution, just like heights or big distributions, normally distributed around that center. Bonds have a negative skew. They make money, and then they have a bad time. So there's more downside. Bitcoin, it's the only asset in our survey that has a positive distribution. It made 29% on average per quarter over the last 5 years, but it punches well above it punches positive. So we thought that as being odd. Why would this asset not have a normal distribution? We understand why it doesn't have a distribution like a bond. The point is, it has been an exponential grower. It's being pulled up and up and up by adoption. Equities are fully owned. They're fully distributed. We believe that growing adoption is creating that very unique return profile, where it makes an average return and then all of a sudden it goes boom, and it punches far to the left into positive territory. Again, please look at the document. It should make you curious and ask more questions about why it's happening, which is what we want our research to do. Not give you an answer, but give you information to draw your own conclusion.
Where do you see, or where would you like to see this technology 10 years from now, 20 years from now? Like, what do you want people to take away from this as we sort of conclude?
I'll start broad, and I know you guys want specifics. So technology has always had the promise of providing more for less, right? So we're living through inflation. Our food costs more, gas is more. That's only one part of it. Inflation has two vectors. I just talked about the things that are going up. There's also a deflation going on. Our computers are doing more for less money.
Think about like our smartphones, like the power we have in our pockets, right, compared to 10 years ago.
Literally, that is the power of what NASA had to go to the moon. So there are two things. So I would hope that blockchain technological innovation can actually bleed more into our personal, social, economic sphere, so we can offset what is clear inflation and the housing price issues that we have. So that's my hope, is that it actually can change and provide wealth and opportunity to more people, to the 2 billion people that are unbanked, to the migrants and to the refugees who go from spot to spot and just have their money stripped from them. Maybe they can hold it with their seed phrase and start someplace new with that $100 or $1,000, to help them once they find safe shore.
No, I agree, and I think that's a great vision to have. A hope for that. Yes, technology. We're trying to solve today's problems with technology, and I hope that blockchain, whatever it may be, can solve those critical issues we're facing today. And appreciate the time we've had here. There's so much more to learn about blockchain.
A lot, yeah.
There's so much. I think we're just on the tipping edge here. If people are interested in like following you, is this where you have any articles, or how can they reach you or follow some of your work to learn more about the space?
Sure. I'm on LinkedIn, Mark Connors at 3IQ. I have a Twitter handle at Risk Dimensions. That's just something I started years ago and I kept with. And then our most important is our website, 3IQ, 3IQ.ca. We have our information up there.
No, perfect. You know what? And I'll make sure to leave links for all you guys in the description below so you can check it out. Follow Mark. Get like great insights for him. And at the end of the day, you have to do your due diligence.
You got to do it. Yep.
Research.
It's on you. Has to be.
No, appreciate it. Thanks, Mark.
Thank you so much for having me.
Thank you.